Our next guests are both widely credited with predicting the current financial crisis we're in. Their recent seminar in Davos drew standing room only crowds. Folks like Bill Gates and Michael Dell waited in line for hours as if they were waiting for tickets to some big concert just for a chance to hear what these two gentlemen had to say. And we do consider them Dr. Doom and the Black Swan, a moniker I'm sure they will appreciate. Nouriel Roubini, the chairman of RGE Monitor, he's professor of economics at NYU, and Nassim Taleb, who wrote the terrific bestseller, The Black Swan, The Impact of the Highly Improbable. And we welcome you both. Thank you for joining us today. And why are you both smiling, for Pete's sake? You're bears. You're fearful. You don't like this economy right now. Nouriel, what would it take? What would make you bearish on this economy right now?
Bullish.
Bullish.
I'm sorry, bullish.
Freudian.
On the economy, yes, very much so.
Well, my view is that even if we do everything right, meaning the right combination of monetary easing, of fiscal stimulus, of cleaning up the bank the right way, reducing the debt burden of the household sector, we're going to still have a severe U-shaped recession last 2 years, mild recovery next year with subpar growth of 1%.
Yeah, but that's not the end of the world, is it?
What?
That's not the end of the world, though, is it?
No, in that case, not the end of the world, but this recession is 3 times as long as the previous two and 3 times as deep as the previous two. And if you don't do everything right, and I think there is a large probability that that's going to happen, then we may end up in a multi-year near stagnation or near depression like the one that Japan had, meaning an L-shaped recession rather than a U-shaped recession.
Okay,
but even a U-shaped recession is ugly.
Let me hear Nassim's view. You're not as bearish as Nouriel is, are you?
Well, I mean, I have a different representation of the world, but it converges. What I see here is the same symptoms that caused me to worry about the system. They're still present, those problems. We had the same people in charge, those who did not see the crisis coming, who took a humongous amount of hidden risk, they're still around. The bankers that got us here are still around. And we're giving them more money. So I don't see that we're doing something to get out of the crisis. Look, for example, Nouriel, he's not in government, okay? There are not that many people who saw the crisis coming who are in government. So unless we do something drastic, we're not going to pull out of this.
So what would you like to see done, Nassim? What needs to be done to change your view?
The first thing is someone like Nouriel be in government, someone who saw the crisis coming. I was in Davos. All these people were talking as if they knew what was going on. But last year, they were talking a different language. They didn't see it coming. They're not going to see the next step, and they're definitely not going to see how we're going to get out of here. That's the first thing. Second one, I would like to see the responsible people out of, not just punished, but out of office. They're still in office.
Who are the responsible? That's CEOs or government?
Mr. Bernanke did not understand the risks the system was taking. I want him out of there. People like him, we should immediately remove these people from, it's like someone crashed the plane and then you give them a new plane and say, oh, we're going to fly with you now?
Yeah,
now
but these things happen.
Sorry?
Dennis?
So, Nouriel, if I could bring us back to the real purpose we're doing this, because we know the forecast is dark, continued dark, forever dark, until finally there's dawn. What I want to know for you, Nouriel, are you looking at one particular metric that when it turns or the rate of its decline begins to slow, you begin to think, oh, maybe now we're going to start to come out. Maybe there's glimmerings of hope. What one metric should we be looking at? What do you look at?
Well, there are not one metric, there are several of them, but the two things that are important in my view are the following one. Okay. As long as there are going to be job losses of 500,000–600,000 per month, the economy is going to get worse and people are not going to spend money, even if long rates are lower. Therefore, the conditions in the labor markets are crucial. People are shopped out, saving less debt burden now, falling the value of their homes, in the equity market, job losses. The consumer is on the ropes. He's not going to start spending. Secondly, we have to resolve the problem of the financial system. But in my view, guaranteeing the bad assets or buying the bad assets, putting them in a bad bank is not going to work. Many of the major banks are insolvent. And you have to do what they did in Sweden rather than what they did in Japan.
Okay,
in Japan, they kept the banks alive, the zombie banks. In Sweden, they took them over, nationalization, they cleaned them up, and then they sold them to the private sector.
Okay, but you got a particular index you're looking at to measure that? You got a particular metric you're looking at on the bank, on the bad bank area? Is there one thing
I've estimated credit losses. They're going to be peaking at 3.6 trillion. So we have to look at the credit losses, and they're mounting right now. The rates of charge-off rates are rising much above they were in 1991 during the previous banking crisis. As long as that happens, 5%. Most of the banks are bust and nothing is going to improve.
And Robin, let me ask you a question. Being a fellow member of the media, when I hear that Bill Gates and Michael Dell are lining up to listen to these two guys in Davos,
To me, that screams of market bottom, like peak of the hysteria. Isn't there something in that little data point, if you want to call it that, that says something?
There's an element of rock stardom for these gentlemen, kind of a morbid fascination that may potentially harken to.
Gentlemen, beware rock star status.
Yeah, but they were right.
Because when you achieve rock star, they're right now. But let me tell you something.
May I ask a constructive question, kind of bouncing off Dennis's point, both to the professor and Mr. Black Swan. I'm curious. People accost me at cocktail parties and other events and say, suppose I'm having a child that's due in a month or so, T-minus 18 years to college. What, considering all of this doom and gloom stuff, do I invest the money into to be competitive in terms of college costs going up? I mean, if both of you were to sire children tomorrow, what would you put them in over the 18-year period?
I mean, I guess the answer, the question, what you're asking is, do I live a normal life or try to, or do I just kind of live with this cloud over my head right now, Nassim?
Yeah, well, let me tell you what bothers me about all these questions about, hey, how we're going to pull out, is that it's not a regular crisis like 91 or so on. This whole system has to be changed. What has to be changed, this dependence on debt needs to be eliminated. We need to deleverage to have a more black swan robust society. We're going to have a lot more stable society, robust. To build robustness, you're going to have to eliminate debt. So we're going to have to live with less debt, change the culture, maybe change the system. Also, we're going to have to get rid of one problem with banks, which is that asymmetric payoff. People make bonuses when they print money, supposedly Madoff style, and then they lose all their money. We pay for their losses. This has to be eliminated.
But how does that
compensation is the smallest part of the problem. Compensation doesn't amount to 1/1,000,000th of the losses that we've taken on here. Right? Compensation is the problem.
That's not true, because the system was built. All this risk taking was built because bankers had an incentive to take hidden risk. That prints money for a long time and then be extremely fragile to black swans.
So how does that answer
How is this actionable? How is this actionable? Do I stick my money under a mattress? Do I stick it back in the bank?
Listen, my idea that you cannot trust someone making a bonus and handling risks that society may have to pay for. And I saw it when you look at the Pentagon, we look at these people think about risk in a very healthy way. So therefore, Wall Street can no longer operate like before. Those who may be bailed out one day needs to be nationalized.
Okay, Nassim, even if I grant that, how do I sublimate that into action today? If I'm terrified, if I'm not getting anything on bond yield, where do you put the money? And also, Professor Rubini.
We're going to change the system. I'm not here to give immediate investment advice, although I have
you're here to proffer doom and gloom, but I need to know where
let me ask you this. Are either of you invested in anything right now? Nouriel, do you have any investments?
No, for now I think that cash is king. First of all, I'm not a prophet of doom. I said that in the medium term, the globalization will lead to high global economic growth, but we had a huge mass of credit and asset bubbles and leverage, and now there's a very painful process for the U.S. and global economy of deleveraging. And Nassim is right. Households, financial institutions, corporates, government leverage too much. We have to have a more sustainable growth rate based on actually investing in real physical capital, increase labor productivity, rather than housing stock that is not productive.
So you wouldn't,
having less people going
tell
into
somebody
finance.
To invest for the long term then? We
have to change the way. For the last 20 years, we've had an economy that grows only when there are bubbles. In the 80s with real estate, in the 90s with the internet, again with the housing bubble. We have to have more sustainable growth based on investment in real human and physical capital.
Nassim, anything in your portfolio?
Well, I'm between 100 and 200% in cash, which tells you that there's a short. But I think that cash, people think that when they have cash, they're not invested. With cash, I'm there to pick up pieces, you know, when you're going to see opportunities. And in my opinion, you're going to see a lot of stuff by people getting out of positions in the next 4 or 5 years.
We're not there yet?
We're not there. To me, I mean, I think to me it's just the beginning, because we need to deleverage so massively that asset values are going to go down a lot.
Gentlemen, before we go to a break, and we're going to keep you around after the break, the financials are rallying today, some of them, because they think that the Geithner plan will be effective. So I assume, from what we've just heard, that neither one of you thinks that Tim Geithner's plan will remedy this situation. Is that correct?
You bet. I don't think much of all that class of people managing, you know, these plans in society. They failed, and they're going to fail again.
All right.
Mr. Rubini, you agree?
Yes, I agree. I think this is just a patch. It's not going to resolve the fact that the banks are insolvent. There are 3 ways you can deal with the problem: nationalization, guaranteeing the bad assets, or bad